Hello, viewers of Prospero.ai live stream. It's Steven today by myself. George is in a bit of a situation. I think he's still on the West Coast. He's trying to get his stream situation set up for today. So while we're waiting for him, I will be filibustering, as we call it so nicely. But as we're waiting for some people to join the stream, we're seeing another green day in the market, which George called on Monday. For those who saw that stream, you probably saw him say, I teed him up to kind of continue he's been bearish on the markets, and I teed him up to see if he wanted to keep his bearish stance, and he said, don't be so quick with the bear, George. So he was in a good mood on Monday, and it's continued to today. Let's see. We got 3 people in here. If you guys have any questions for when George gets here, feel free to comment them now, and we'll get them teed up and ready for George. But as we're waiting for him, we'll just take a look around the markets and see what's going on. Let's see, 3 people in here. Comment if you watch a Monday stream if you're in the chat. Let me know. We're in a different role than usual right now, huh? I'm usually just the setup guy, and George is the spike guy. But I'm getting this thing started today. Also, comment if you checked out the new app interface. If you guys didn't see us announce it on Monday, if you missed that stream, the Prospero app got a complete overhaul by someone who actually used to work at Apple, and he designed the new app. And I think it looks amazing. I was shocked. Yeah. Thank you, James. That the new app is just such an upgrade over the old one. And George was telling me about it for a while, and I was even still surprised when I saw the new app come out. It looks great. Maybe I'll just preview our topics for today with you guys, and you'll know what's coming when we're talking about them. So and I'll tell you a little bit about the structure of the streams and how we do it. So every stream we do, we have a bit of a structure where we start off with George's stance on the markets and what he's seeing. It's kind of a bit of a micro look at the market. So it's very short term, what he's seeing. And then we get into the biggest stock stories that we're seeing, maybe 4 to 6, depending on which stream it is, Monday or Wednesday. And then we try to end it off with a bit of macro and some of the data that we're seeing. It's been released, some things that the Fed are doing, and all that type of stuff. So that's kind of the structure for the streams and how we've been doing it. Feel free to comment if you've been enjoying the streams, what we could do differently. We try to make them as helpful and entertaining while still, giving out good information as possible. So direct feedback is welcomed, and constructive criticism. Yeah. So this is the Wednesday stream, just me. Any other comments? Any other questions? Any other topics that you guys want to see today? I think George is still on the West Coast. So those West Coast vibes are different. They run on their own time out there, huh? I don't want to actually say the topics that we're talking about because I feel like we should keep them a surprise for people. But yeah. Let's just see. Okay. So today, the best performing index is a Dow Jones. It's up 0.6%, 0.61%. The S&P is up 0.3%, and then QQQ is up 0.15%. Let's look if in Prospero, if the net option sentiment for the Dow, the QQQ, and the SPY matches the performance for today. So we'll check out the Dow first. So the Dow is at a 60 net option sentiment in Prospero, which is seems pretty high because from what George has been telling me, the indexes are used to hedge a lot for a lot of the market bets. So they're usually lower in net option sentiment, and the bull zones for them are lower than just single stocks. The QQQ is at 51, so the QQQ is lower than Dow, so that would hold up to be true by the performance we're seeing today. And the SPY is at 15 only. So the SPY is the lowest of the three in Prospero, but it's actually the middle performing one in the market today. Oh, and do we even want to look at the Russell? The Russell has been so bad this year. Let's see. Let's see how the Russell. Let's see if Prospero has the Russell. No, I don't see it. I don't see IWM. But let's see how the performance is anyway. Oh, the Russell's up 0.2% today, so it's finally hanging in there after a dismal year. Check on rates. Looks like rates went up a bit today, which is usually not good for the market. Oil is down. No comments or questions? Let's see. Comments or questions? Okay. No comments. So what do I want to spin it to? Looks like the man of the hour has joined us. George, I see him in our stream getting ready to join. That's a welcome sign of relief for me because there he is.
Run
He's
out of
joined us.
did you run out of things to say, Stephen?
Oh yeah, I was stalling heavy right there. I didn't
Oh
want
man, I gotta I don't think I think I might have to get like close because I don't I think I know where my zoomer is. Um Thank you. Sorry for being late. I have to to everyone. I was I didn't I'm on the West Coast and I did not properly time my checkout and everything of the hotel I'm staying at. But here I am now. If you want to go a little farther back. Um we can probably jump in. Oh, I want to just let other people know. Oh, new app looks great. Thank you. I don't know if that's I don't know if that's the James that is working with us or not, but you picked a good day for me to come
Yeah,
here to wait for
we were
me.
t- we were talking a little bit about the new app. We checked out, QQQ and SPY and Dow, net option sentiment in there. Um, yeah, we were just
Oh,
kind of
good. I'm glad. I
yeah.
was like, oh God, I don't mean. I hope I didn't screw over Steven too much here. Oh, and we got you know what? We got people coming even though I'm late and I didn't send out, I am going to send out very quickly um, the the link. How do I get the YouTube link here? But yes, I will try to multitask. You can lob the first one at me while I get this last thing out, telling everybody we're
Yeah.
live and showing off notoriously bad uh, my notoriously bad multitasking abilities. But hit me with the first question. I'm almost done.
So what's funny is I was asking the chat to comment questions while you were gone, but they don't comment them, and then once you show up, we get two right away. So they were waiting for, the guy with the answers. But we'll get to these
You're not the
comments.
man in charge, Stephen. Sorry.
No, no, I'm just a setup man. I know my role here. But we'll get to these comments right after our opening segment with George, which is just he's going to give us a little bit of what he's seeing in the markets. He had a great call on Monday where I was setting him up to keep being a bear like he's been, and he didn't. And he saw this, little rise in the market coming. So he'll just update his stance and what he's seen in the past 2 days and for the rest of the week. And you can go, George.
Yeah, I always have kind of like a pretty measured approach to this stuff. And I think where people were like super bullish on going into today and I was a little more bearish, I think yeah. Um I think yesterday like our net option sentiment was pretty for Monday everything was like pretty positive. Even though there was a bit of a tougher start and pre-market didn't look that well. So yeah, I think that today I was very nervous, and you might even dub in like one of the first investors in this round, who lives in London. When I was up very early, was asking me like what I should do with the portfolio, and I was just like, this is like one of those things where especially overnight, I can really empathize with people because I really like I would encourage our users to depend on an option sentiment, and it closed yesterday pretty good, and but I was just like, I don't like I'm not fully buying it. I'm not fully buying that. Um, I'm not fully buying that. We have all of things. But the thing that I always try to look at is like we had 8 days in a row last week that were positive, and then just this like exuberant reaction to as they should inflation yesterday. And like me, I look at that and I say like, man, it's only a matter of time until people start to take profits. There's only a matter of time until that happens, and there's opportunity. There's blood in the water, and the momentum starts kind of like going the other way. Because the second some of the people start to jump off the ship, everybody says like, oh well, it's profit taking time. So yeah, I'm worried about this. I'm worried about this turnaround. Like I do think that I do think that it's becoming pretty clear, especially with the inflation reading, that we're pretty close. Like I think we've seen the bottom. Not necessarily like, with this little run, like, we've seen the bottom in terms of like 2022, in my estimation. Um, Obviously we've come up since the bottom a fair amount. So we could even have, room for the bear case that I shared on Monday, where we're down 20% in 2024. But, we've still hit the bottom in this like overall cycle. And I think that that's like, yeah, I think that that's pretty important. I think that, um, I think that, you know, we're definitely seeing a lot of people kind of I would say the main thing and the thing that really made me nervous and one of the things that I singled out, like we've been watching the stock Douglas Elliman to drop, and maybe I was a little late on dropping it. But like Douglas Elliman is mainly like a real estate like rental company. At one point yesterday, I saw it was up like 14%. And like people are really enthusiastic. And for those that don't know like the connection there, like, obviously interest rates coming down is really helpful, or like even the forecast of them coming down is very helpful to, the real estate market, property movement, things like that. And obviously, less fear around the market, less like, is just more spending money than it would be if we started bearish. And there's, kind of like a lot of connection points there. Anyway, the long and the short of it is that um, Douglas Elliman shouldn't really be moving 14% in one day outside of maybe like a big earnings beat. It's like mainly a cash flow company. It's not like particularly exciting. There's not like a lot of reason to speculate it. So when I see things like that, I start to say like I can't be the only one that thinks this is a little too much enthusiasm over this inflation reading and like the 8 green days last week. So that's just like how I look at it. And sometimes like that's really the only way you should look at the market. Like, to be perfectly honest, where it's just like, yeah, sometimes all the signs, and this is one of the things that I don't like about technical analysis. Everything would have said buy yesterday. Like nothing would have told you not buy in a technical analysis, but that just wasn't the story. The story in my mind was there's too much enthusiasm towards this good news, and it's going to come back in the other direction. Maybe not as soon as I saw it today. Um, but yeah, I think anytime you see like it going too hard in one direction, even if that's the correct direction, I start to get worried about like a pullback. And if I'm worried, a lot of other people like and algorithms. You start to get those first people that say like, "Oh, I'm going to take my profits from yesterday," and then the algorithms get wind of that, and it gets acceleration, and like there's less small corrections in the market with all the momentum algorithms as they are today. Um, but yeah, I think that's a good, you know, intro because I think people definitely should remain cautious. But maybe we get to the question, Stephen.
Yeah, so I think the first question that we have kind of would like line up right with your theory because if Jonathan's right and Celsius's breakout net option sentiment, I guess he's saying, went from the low 90s to 59, that would line up right with your thinking. But it also just had the stock split. So does that affect that indicator?
Um, yeah, like I think part of it. Um, let's look at it. I think corporate events right now, some of them it takes like a day, like the way we pull the prices. Some of it, like, yes, I think our algorithms could unfortunately think that that there's a split, like that there was a big price drop in Celsius. So I think that that's something like, honestly, it's one of the things on our radar, especially like corporate events. It can take a few days to sort out. And that's the kind of thing that, like, when we're operating on like 200K in funding, that's just something that unfortunately we can't get to. We can't get to everything, but we're almost done with our funding round. A lot of those like things are going to be patched up. I'll keep watching. I'll look into that specifically. Um, but I do think that sounds like a case of like, in some ways, Prospero doing its job as it's told. If it thinks the stock price of Celsius fell that much in a day, that is definitely going to affect the upside breakout. But at the same time, I do think that's a smart read that that I don't think we have like the intraday corporate event stuff worked out quite yet.
Okay, so that's a good
But I will
resolution.
also say that net option sentiment has nothing to do with price, and there's no price in that. And I also did see that fall off a cliff. So it's possible the corporate event was worked out and that, but like that's something to look at for sure.
Yeah,
But
and the
I
other
do see the bottom falling out of net option sentiment as well. So could just be could just be a lot of people basically like playing that event and then clearing out of their trades.
Yeah, and so the other question we got is also really interesting from James. He's asking about Alibaba. The metrics look good. Would you avoid it due to China risk? And it's interesting because I think Xi and Biden just met today. So that's like, a current event that's going on for that. But what do you
I
think
mean,
about that?
yeah, the one thing that I will say about Alibaba historically is like I wonder if I wish I could search my maybe I can Google search it to pull it up. Um let me see. I'm gonna see how well Google search can. Oh, I think yeah, Google worked as yeah, I have one that I'll just pull up. Um is this both Baba case studies? Sorry, I'm just making sure I have. Um I have both. Oh, that's a different letter. Oh, I know another place I can find it, but I'm going to talk a little more as I go. Um, yeah, so basically, historically, we've done pretty well with Alibaba, and I think that I think one of the reasons that uh, and I'm about to pull something up now. Um, view. I don't think. Okay, I'm going to start sharing screen. Sorry, I was getting it all set up. We're just behind on everything today. Um, okay. So I think this is like a really good, and this is like a super important look at especially like Alibaba. Um, one of the things that we saw like in this very clear run is that, net option sentiment is, and we actually saw this a few times, but this was like one of the ones I can pull up. I think I could probably pull up the second one after this, one after the other. Like we definitely saw, like in the past, we actually see like before, not only do we see net option sentiment like rising like well before, this purple price line really starts to take off, you see upside breakout joining it near the top of, and unfortunately net option sentiment is this scale, so you actually see it like at about 90 here. It's a little confusing the way this graph is drawn. um, but yeah, you basically see a clear rise in net option sentiment and upside breakout before this big baba price run. And then there's actually another really good example of it in March, but like this is just like main thing. Yeah, you see like it's going pretty far above and a clear, very clear run up before uh price starts to run up. And like we actually called it the second time because we saw a similar pattern. And I'm giving the extended answer on this uh because I have a theory that some people get positive news events around something like Alibaba. And both of those events actually tied to news events. So the first one was actually when there was that weird thing with Jack Ma, and then all of a sudden he reappeared, and then they announced a new funding round for Ant Group, his company. And upside breakout and then option sentiment started spiking before that. And that's the first time where I was just like, well, that's interesting. I wonder if people in China were betting. And then, like, as we always do, because we're big on the scientific method, we said the second time, oh, I'm seeing another really like similar and consistent pattern um, in that option sentiment. I wonder if something's going to happen with Alibaba. And we added them to our newsletter both times because we kind of saw that pretty consistent pattern. Um, so that's all to say I would have to dig more to say, like, are we seeing a similar pattern a third time? I did see a pretty positive trend in net option sentiment for Alibaba, so it would not surprise me to see another news event coming soon for them. But I would like to dig more on that before I say, hey, this is very similar to like the patterns that we've seen. Um, but I definitely think that I've seen plenty of evidence that there looks to be some Chinese entities with inside information on these news events that make pretty clear bets before them. So I would say actually like because of the way China's economy is set up, uh, that I think it's kind of more conducive to maybe some of this like, information that everybody knows that the people that have it know they can kind of like capitalize on like pretty exclusively. Um, we've seen evidence of that. So I would say actually for Chinese companies, I might be more interested if I see consistent net option sentiment and especially upside breakout runs concurrently. Um, but that all being said, I don't really like to invest in China because there's always China risk. Like I did those Alibaba things and like I'd say I like to do it more in timing, but like China as a long-term investment always makes me nervous because you never know when like a Jack Ma is gonna like disappear and like all of your solid, work and like um I guess I like to look at it like this. And even if I look at it in like another problem with China, I say is like you don't really know if the financials are real financials or the CCP is asked like certain numbers to be scrubbed or certain numbers to be shared or anything like that. And like the way that I like to talk about investing is it's like it's hard enough even when you have something like the SEC that does have like real processes in place that companies have to follow, even though it's not perfect and like it's not like a perfect information transfer and people in America still have information that other people don't have. And like we talk about that all the time. But that's a known problem. And at least I know, or like I know pretty reasonably well that like Elon Musk is probably not going to disappear, maybe because perhaps our government had something to do with his disappearance. Like I'm pretty confident that I can say that and it's not going to blow up in my face. Am I 100% sure? No. But I'm a lot more sure about Elon Musk's safety than I am about Jack Ma's safety. And like I think that's just how I view China and investment like being hard enough. I don't and like I want to deal with the most solid information that I know. Um but like at the same time, like yeah, I'd be happy to take and I think increasingly I am talking about stocks like this because I think it helps. Like in a 20 stock portfolio, probably even a 10 stock portfolio. Like, is Alibaba a solid long? Yeah, absolutely. In light of all the risks, I think having some kind of China diversity is a good thing. Um, would I put this in my top five? Is it iffy in a top 10? Absolutely.
Yeah, so it's going to be interesting to watch how all that plays out, and we'll keep our eyes on Baba. We have another question from Shane, and he's asking if you could give him advice on, where he could look for and where he could learn the most about how to value companies, specifically growth companies, and he gave an example of ENVX.
Tough. And one of the reasons that I really think the Prospero signals are great and why we built them is like I think it can be really hard, and like we use this example all the time, so I'm going to go through it quickly because I think it's very powerful. Like, you look at Nvidia and has like over 160 profitability plus growth rating, right? And then you look at um, Meta that has, closer to, it's closer to 140, a little under 140, right? So in terms of like the where the growth, like the two most important like company metrics that they're growing and profitable comes in, Nvidia is a better company than um, than Meta, right? But why does Meta have 100 upside breakout and Nvidia have like close to 60? Because everybody knows that, right? And the 2024 PE on Nvidia is closer to 60, and the 2024 PE on Meta is closer to 20 to under it's under 20. So I think that that's like a really important, just like tight lesson on valuation, and why I think the Prospero metrics are helpful. It's like I think what is going on in the options markets is an essential tool in understanding value, because like, is ENVX a promising company? Absolutely. I really like their technology. Like, but at the same time, I think they were only forecasted to do like $60,000 in revenue or something crazy, and they did 1 million, and people were excited about that. But that's like, it's a public company. $1 million is like, like most of the public companies we talk about could like lose $1 million in their building in a day, and it probably would barely even matter to them. But I do want to look at ENVX. I don't even know when they're um, forecasted to be profitable, but I want to make sure I have the right numbers so we can talk about that next part. So yeah, negative PE for ENVX through 2025, right? So how do you value a company that we don't even know how it's going to be profitable? You don't. It doesn't have any real value. It's the only value is like what we all agree it to be. And I think a good framework of what is a good agreed upon value is how institutions see it. Because at the end of the day, what they think is a good price, what they think is worth a bull bet versus a bear bet is much more important than what I do and what like you might say the options markets agree on. So I think that's like a good framework for like why like we look at things the way we do, why we invented that signal. At the same time, they're 90 on growth rating. And like what is ultimately going to do very well, like that all being said, what is ultimately going to do very well for a company like uh, ENVX is maybe looking at a different number, and I'll pull it up. I like to do enterprise value to sales, and enterprise value is just market cap minus debt. Uh, and I'm gonna look that up so we can make this a good overall value investing lesson. And we can think of like if anyone has some other growth companies that you want to look at in relation to this, that might be a good exercise. Anyone can like call them out. Um, but I'm trying to look at I'm trying to find EV to sales, and I don't know why. I don't know why the internet is not cooperating. Everything is being very difficult with me today. Um, they used to have like it used to be um okay. I'm pulling it up. Enterprise value. Yeah, sometimes price to sales. Um, but anyway, like I'm having trouble finding a good source on this. But anyway, like if we're talking about it in theory, what I would do is I would take enterprise value to sales. I would look up some of their competitors, and we can come back and maybe talk about this on Monday or next Wednesday. But yeah, I think on more mature companies, you want to look for uh, you want to look for just like I like to see 1 year forward EPS or PE. I think that's just like the simplest valuation that you can like benchmark and then build a wider story around that. Um, and then I like enterprise value to sales for like more struggling companies. And like to put this in like perspective, like when a lot of people talked about like the value of AMC, like I would always be like, they're just like, and this like pains me that like some people that actually invest real money in the stock market don't understand its concept. But everybody would be like, well, why is AMC trading at $10 when Cinemark is trading at $15? And it's just like, well, the market cap of AMC is actually bigger. You don't just look at the price something trades at and determine the value. Oh, and by the way, like uh Cinemark, like AMC's trading at like a 5 multiple of enterprise value to sales, and AMC's trading at like a 2 multiple, or sorry, the reverse. AMC's at a 5 and Cinemark's at like a 2. So it's just like, actually, Cinemark is cheaper than AMC, and you're here complaining about a price and you don't even understand value. So it can be challenging for a company like ENVX that I think like doesn't have a lot of like really solid, clear comps. But like I said, it's just a framework. And even if you have to be like, this is ENVX's enterprise value sales compared to like, I might look at like Tesla, and I might look at I don't know what the hell that is. You guys did? Jesus. Um,
It's just coming in and out sometimes.
this is just not our day.
What actually is it?
All right, Steven, I got to mute. We can't. I think they're fixing it.
Okay. All right. George is muted. I'll just try to stall. I really want to actually thank the chat for all the questions we've gotten so far. It's great to see some participation from you guys, and we always love answering your questions. Um, George is having some sound troubles. I wonder how it's going. I can't hear him because
I
he's
think it's
muted.
going better. Uh, not yet. Okay. Hopefully that was helpful. I think like yeah, I think what you want to look at is you want to set some benchmarks. You want to say like Tesla, I think like for solar or like um Enphase, like just anything in like battery or anything that you think of as like related, see where they're trading at. And then it's just like you get like a basis to form a wider thing. Like, and obviously that's why we also think Prospero is pretty helpful there. Um, where it's just like, well, I think it's also helpful to say like, oh, like, well, um, ENVX also has like a 90 growth rating in Prospero. So obviously we see that growth like really accelerating. And sometimes looking at forward growth multiples, sometimes like looking at like what projections could be, like where ENVX is projected in terms of just like sales growth and things like that, versus some of the comps, then you can like start to back into stuff. Um, but yeah, it's super hard. Like you're talking about like like one of the hardest problems that like everybody can agree is hard is just like how much growth is built into a stock price. Like we talk about it like Nvidia's like the hardest. Nvidia, Tesla, it's very hard and people debate it all the time because they're just like, well, like if they continue like Nvidia especially, if it continues to grow like it does, it's a deal. Like but like forecasting that much growth on an ongoing basis is not like a sound analysis methodology. And we've like talked about like one of my favorite Buffett stories is that I know whatever. Um one of my favorite Buffett stories is that um he was offered to buy like private shares of Amazon. Bezos approached him and he made him a really good deal. And at that time, like value investors just like actually didn't really invest in tech stocks. And Buffett like lists this as like one of his biggest regrets. And he comes and he's offered like a deal on Amazon stock, and he basically calls Jeff Bezos insane for like the growth multiples that he's planning for Amazon. And he's just like, I'm not paying for this. I don't pay for these kind of growth multiples. Like, he's like, the market might say that your stock is worth 50, but like, I'm not paying you 35 just because the market says it's worth 50. And like, Buffett like famously regrets that and says like, just like, I actually wasn't seeing into the future enough at like what these growth multiples could actually be. And I think that that's a really good lesson, that like sound value investing principles, which is really based on forecasting exactly what you know, and you know growth stocks can often really be at odds, and you have to make your own determination on what you know, feels right to you. Because at the end of the day, like Buffett's fine, but you can tell that he regrets. Like he wishes he was smarter to have like known that that was coming. No matter how much he wins, he loves to win. He wants to be right all the time. Most of us love to win. So I think like actually it's just really about your comfort level, and it's like there's two important factors, like how how much do you believe in it, um, and like, can you lose the money? Like, those are the two things. Like, because if you really believe in it and you can lose the money, like, you'd much rather invest in something that you really believe in and not kick yourself later than, not make that decision. But if you are asking yourself, if you're telling yourself, like, I'm not sure how much I believe in it, or like, it would hurt to lose this money, then the answer is you probably shouldn't invest in it. And you can look back on that. And if part of you is like, well, what happened? I should have known. Like, you don't have to kick yourself for that, because you're just like, you know what? I couldn't lose this money. I made the right decision because I didn't want to lose the money.
That sounds like really sound advice to me. And there's a lot to touch on from this. And we're actually going to get to two stocks that Warren Buffett bought recently. But before we get there, the chat and the viewers will have to stick around. We're going to touch on George Soros, Stanley Druckenmiller are both selling out of semi stocks. And Michael Burry, the big short investor, has a bet against the iShares Semi ETF worth 47.4 million. So it's all kind of tying into like your tentative stance at the beginning of this program that you gave. But what do you make of all of these, smart money investors in the market going against semis right now?
All of these smart money investors going against semis. I think that it's something I've been worried about. Like, I think that, you have your clear institutional buy-in, and then you have like the retail horde. And sometimes these days it's like the retail horde and then the institutional buy-in. Like, the spark actually goes both ways. Whereas actually for a while it was like institutions first and then retail. So I am very proud of retail for like changing that dynamic at least a little bit, even though some of it is stupid meme stock sometimes. I'm still happy that that dynamic has changed. But yeah, I think it's kind of like actually goes back to what we were just talking about really well, which is just that like it's hard to know when there's too much growth, and often like too much growth priced into a stock. And it's very rarely retail that decides to say, oh, I think there's too much growth in this. It's almost always the game of musical chairs that's being played by institutions. It's like, we've made enough money. Because that is actually one thing that I learned from the AMC saga, is that actually retail is greedier than hedge funds, sadly. That like most hedge funds will get a 10x return and they will say, thank you. I've made my money. I will move on to the next investment. Retail can get a 10x return. Retail can get a 50x return. And they're talking about the 1000x return next, and that they're holding out until they get it. And it was a very strange thing to witness, to see like retail investors just being like, nope, this isn't enough money. We want more money. Like, when it's just like, I don't even see the like, I don't see hedge funds ever be that greedy, to be honest. They're happy to make their win. Um, and I think that that's just like, yeah, like I think we're going to talk about 13Fs next. Um, but I would say, I think that, yeah, like, I take it very seriously when I think institutions might say, like, I think there's enough growth built in this. Time to take profits. So yeah, I would say watch your back on semis, something I'm thinking about. But there's more to this answer later.
Yeah, so I set up how we were going to share the two stocks that Warren Buffett bought recently, and those are Sirius XM and the Atlanta Braves, which is interesting to me, and I think probably interesting to some people to see him investing in sports. So, what do you make of those two buys by Buffett?
I mean, I think that anytime Buffett buys something, it's interesting. I was actually shorting Sirius XM, so went sideways on me. Uh, not the first time that's happened. I've invested in something that Buffett decides is of value and things change on you fast. But yeah, it's just how it goes sometimes. Yeah, I mean, I don't like satellite radio, maybe like I'm sure that's just like without even looking, dirt cheap relative to like what they're making. Because like it is not an attractive business, but that's the lesson we talk about value investing all the time. Like everybody else is like selling Sirius XM because they think that it's a bad value, and Buffett's coming in and just being like, well, actually, that low of a price, Sirius XM is still making a lot of money and it's not dead yet. That's kind of the ultimate value investing mindset. Um, and then, yeah, I mean, the Braves, it's like, it's kind of interesting. Um, I think sports in general are always a good value bet. And I'm sure like the price was there for Buffett. Um, and it's just like sports are a good value bet because like all these franchises, like you look at them, like you look at the prices 10 years ago and they just like keep going up and up and up. Like sports might be the only thing that can hang with like the Magnificent Seven in terms of like the return you get on owning it. And not everyone necessarily gets access to owning a sports team. Although obviously some are public companies now. Uh, but yeah, I think that like I would think that like it's a good bet to invest in like most sports organizations that Buffett didn't buy. If he's buying it too, you probably see something in addition to that.
Do you think Buffett is eyeing outright ownership over the Atlanta Braves in this position? He's going to keep building until he has is the owner of the Braves.
I never put anything past him. Maybe he would like to be owner of the Braves, but like my knowledge of like how his life works, it would be a real shame if he was owner of the Braves because he doesn't seem to do anything other than work. And I feel like, I would always like to think that like as someone that wouldn't mind owning a sports franchise someday, that I would like to go and enjoy the games. And I just don't really see him having the schedule for that. Like he might like I could see him maybe making like a few games a year, but also like reading financial statements during the game. Like, so yeah, talk about like a more, I mean, he's one of those people that like if he bought your team, you'd have to be like, oh yeah, like I'm sure they're gonna be good. Like, and I'd like if I could wager on that, I definitely would. Um, but I would say that like it's a shame in terms of just like the investor in me says like, yeah, Buffett's gonna run the team well. The kid who's always wanted to own a sports team in me is like, ah, it's a shame. Someone that's actually going to enjoy the game should own it.
Maybe Buffett's finally ready to settle down and retire at 96 years old or whatever he is. But spinning it into another sports topic, because like you see sports being invested like crazy now, like all the money that Saudi Arabia is putting into sports, and now Netflix just hosted their first live sports event. It was called the Netflix Cup. It was a golf event. It took place yesterday. Do you see Netflix getting more into live sports? You know, Google, which is like or YouTube, their main competitor, just bought the NFL Sunday Ticket. So does Netflix need to respond and get more live sports events in Netflix?
I think that I think that like they should. All of these streaming services could be do it. If anyone wants to like stick the nail in the coffin of cable, like sports is the only thing keeping it alive. And I do think Sunday Ticket moving to YouTube, like that's probably a pretty scary thing for cable because like I feel like live sports is one of the only things that is like keeping people's cable subscriptions on. Um, so yeah, I mean, if I were Netflix, if you talk about like what are the obstacles and like this becoming ubiquitous or like being able to charge more, like yeah, driving the knife in the coffin of that, the nail in the coffin of those like cable networks, I think is important. We got to do the model portfolio soon because I'm actually like 2 days in a row not sending a letter. I've been busy. But I do want to do the Bury question. If you want to fire that at me, and I'll give my quick answer. Then I'm gonna have to do one of my famously quick model portfolio setups.
Wait, which Bury question are you talking about? I'm confused now.
The short, like the new short.
Oh, I said that when I put the Druckenmiller and Soros, but Bury is short against the iShares semi ETF by 47.4 million right now, which is that
Oh,
was in
I thought
line
it
with the
was like a
Druckenmiller.
larger short.
No,
Yeah.
yeah,
Well, I saw someone talking about that. Like, I think if you're talking about like any kind of like larger market short, um, that anyone has. I think that it's like I want to do this because like it is a bit of like a public service announcement that it's just like yeah, anytime you have these like large shorts, it's very important or any bet, it's very important to know that these 13 Fs you get them like about 6 weeks behind that information. So it's just like a snapshot 6 weeks ago, and not only is it old, and not only could like any of those positions be done. Bury could be like, okay, I see I see the like basically that it started to um that it started to turn around, whatever. Bury could be out of that short by now. So you don't even know if he's in it or not. You just know that he was in it 6 weeks ago. And I actually like I saw someone else post about this earlier, and I was making like a poker analogy. And like I don't know how many poker players we have, but like let's say you have ace king in your hand and an ace on the board. Um and someone you're in a hand with someone and they ask you to show your cards, and like there's not a king on the board, and you just like flip over your king to show them that you don't have anything. You know, that's obviously a psychological game because you have the ace in your hand, but like that's the equivalent of a 13F. Like you don't get to see their whole hand. You just get to see 6 weeks ago what they wanted to show you. So we can talk about this all day long, and some of them make like interesting talking points. And like, yes, you look at someone like Buffett, what he owns is what he owns. He's not trying to play any games. He wants to own those companies. But you look at someone like Bury, especially like when you talk about shorting the market, he's frequently buying options. Those options have expirations, and it's not strange at all to sell like the majority of your option position on like a 6 week basis, especially as the market is starting to turn around now. I'm not sure he wanted to hold through this like little 8 day bull run. So, yes, to me, that could be like very old news. And we shouldn't, no one should read too far into that.
yeah. I think
All right.
the position that you were referring to, I did see in the article I read, he had like a $700 million short on like the QQQ that I think he also closed.
Well, I mean, the new ones, whatever, you don't know. Like unless you're talking about like value investors who I do trust a little more. You never know. Okay, I gotta do this model portfolio. I'm behind on everything. Steven, your job where I ask you where the SPY and QQQ are is gonna come up. Um, and
I'll be ready.
thank you for the confident about my shirt. Busy Sundays. I know who you are, despite that name not a very familiar name. Okay, I think I have this. I need to open my filter. Uh, What else do I need? I hate when this opens. All right. This is going to be like one of the big filters that I've been doing lately because I've been liking this a lot lately. All right, we need this. I think social sentiment is going to be somewhere. And I think we have profitability and growth. It's a big filter or screener. I'm supposed to call it a screener. Um, all right, we're just gonna take a look. Well, it doesn't really matter. I know we need all that stuff. All right, so we're minus this. Can't wait to be back on my regular keyboard. This keyboard sucks. That wow. Meta is very high in that filter. Oh, damn it. I forgot something. It's a 2x net option sentiment weight. Okay, that's done. Now we have this. Oh, we have some new things potentially. We need to go here. It's been a busy week. We have that. Okay. Oh no, never click there. All right. So we need this. We need to mark this paid. This. We want this. I think it's the 15th. All right, Stephen. Well, it's not time for you yet. Sorry. Eventually, it's going to be time for you to tell me what the indexes are doing. But we're ready with multiple ones. All right. Which one? Oh no, it's 2. How many do we have here? All right, we're doing 12 again. Well, all right, doing 12. You do this first. I think we have all of these stocks already, so that's good. I want to do another SM. Oh, we don't have Netflix. We'll take a look at that. Thank God the Fed. Oh wow, I got the order right. 352. All right. All right. We're doing Netflix. I don't know if I want a ton of these. I think I have all of the rest. I'm gonna look at SMCI. I want to look at it here because I might want another SMCI. I think it's just too good of a buy to miss the floor on it. But I want to verify. Oh yeah, we're doubling up on that. There we go. All right, that's all. That's all for longs. We might want more shorts. Oh no. No, we don't want to lie about this. I forgot to do the filter. Short pressure less than 81. Now we're being honest. Okay. All right. Have you been looking at QQQ and SPY net option sentiment, Steven?
Oh yes. Yep.
I'm going to want a full update on what's been going on with it.
Yep. I'm ready.
Oh, that's biotech stuff. I don't want biotech. Actually, I don't even know why I'm looking. I don't. Biotech. Lumen. What's ITP? Interesting. IT tech package. Oh, this looks like one that could really burn me, but be interesting. I kind of want to do this. We're doing it, but we're going to keep a close watch on that. I like it. All right, Archon. Can you actually look at ITP in the interface and see like the trend on that option sentiment for ITP, Stephen? I'm curious. I want
What's
to
the
be
ticker?
ahead.
IGP.
ITP.
Oh, okay. Okay.
No way.
Net option sentiment 46. Spiking downward, hitting a lower low.
All right, great. We've been burned on this before. Blackstone Mortgage Trust. Yeah. Let's see. No, we're not. We're going to get them. All right. This is not going to be the most interesting update. But let me look at Elliott. Lumen, we sold. We got in, we got out. Interesting. No, we don't want to do that. Okay. I think what we want to do instead, we're just going to post this. I kind of wanted more. I kind of wanted more bears, so we're going to do something. We're going to look at some of the new names that I don't recognize. And we're going to write it in. No, not that. Not China Green Agriculture. Oh no, we need to go here. LTBR. I want at least one bear I'm excited about. LTBR. Oh. And then what do you remember the bear? ITP. Okay, that's so ugly. I think that's better. And then this one. What did we say? It was LTBR. I think that's done. Oh, what's QQQ and SPY net option sentiment?
QQQ is 49 and SPY is at 20.
We're sending this out. All right, we're done. And I'm signing off. Do we have any questions?
There is no more questions besides the compliment that navy blue is your color.
All right, I'm going to go. I got something else to do. Bye-bye, guys.
All right. See everybody Monday.